we are speaking specifically right now about the small finance banks. Ujjivan is among the larger microfinance companies to have transitioned into a small finance bank, and we're trying to understand what that journey has looked like so far. Samit Ghosh is MD and CEO of Ujjivan Small Finance Bank. He's joining us here this morning on Indian Open. Good morning, sir. Thanks so much for taking the time to speak to us. So we wanted to speak to you away from earnings, etc., because in that, you get...
Good morning, Ira.
Good morning, sir. You get stuck in the minutiae of margins, etc. So I wanted to, have a slightly deeper discussion on what's been happening in terms of the transition, sir. I'm going to start with the transition on the liability side. Can you give us a sense of how easy or tough it's been for you to build or start building a liability base, sir?
Well, we have over 450 branches in microfinance when we started out, and we are converting our branches into small finance bank in phases. So right now we have converted about 108 of these branches, and from these branches actually we are offering the retail liability services, the deposit services, and it is our focus initially obviously is to onboard our existing microfinance customers and also open market customers, which are like in a 3-kilometer radius wherever the branches we have opened. So that's progressing well, but more importantly, I think from our perspective, we got a scheduled bank status, a couple of months back. And with that, we are able to raise wholesale deposits at a much lower cost. And we've also raised CDs, etc., from the market. And this has helped us to reduce our cost of fund. So initially, on the liability side, the strategy is to replace a lot of our old term borrowings, which were at higher cost, which was grandfathered to the small finance bank, and replacing them with largely wholesale deposits and CDs at lower cost, and slowly build up our retail deposit base. As you know, retail deposit takes a long time to build, but we've introduced a lot of new technology in terms of handheld devices where customers can open accounts at the doorstep using eKYC and e-signature, etc., in less than 20 minutes, which sort of wows the customer, and we are able to, attract a lot of new customers in that way.
Right. So, say at the end of a year of operations, or maybe even 2 years, what do you think you'll be able to have in terms of CASA, sir, in proportion of your overall deposits?
Well, in terms of as a small finance bank, if you look at CASA, our focus is more on the savings because, as you know, current account balances are largely from large corporates. True. And it comes with cash management services, etc. So, which we will not have that much. We will have a limited amount of that where we are dealing with MSCs, etc., smaller businesses. So we'll get a relatively small portion of the current account. Yeah. But the savings account balances, obviously, we are focusing on. And I think in 2 years' time, it should at least be 20% of our deposit base.
Okay. Sir, on the cost of funds side, you're talking about replacing some of your earlier, borrowings which were at a higher cost. So, how much has your cost of funds come down? And in terms of your trajectory for margins from here on, what would you project?
So our cost of funds have come down around 2% already. From the original, between 1.5% and 2% from where we started as a small finance bank.
Okay, Mr. Ghosh, good morning. Neeraj here, joining in this discussion as well. From an investor's perspective, trying to figure out how sustainable, how long-term would businesses like yours be And how are promoters of these businesses thinking of how sustainable it is? Because the constant chatter is about MFIs and SFBs being acquired or merged into banks as well. What would your prognosis be? What's the kind of growth rate that you believe businesses like Ujjivan can show over a period of the next, say, 5 years? I'm not really talking about what's happening over the next 12 months.
Yeah, see, first of all, the whole proposition of small finance bank is that it is a specialized institution primarily focused on financial inclusion. That was what the mandate from the Reserve Bank was, So we are focused on this large segment of customers who currently get serviced from the informal sectors, or we are not, are not serviced, are unbanked totally. So that's our primary focus. And over 5 years' time, over a period of time, we feel that small finance banks will convert into large mass market banks, because that is a market which is currently unserved, which was supposed to be served by the public sector banks, but they are not serviced, for various reasons of their own, they are not able to service that market. So that is a market which is wide open, and I think in 5 years' time, that is the market which we will capture. That's the objective with which the Reserve Bank set up these specialized institutions, and that's our also objective from very start, when we started Ujjivan about 12 years ago. In terms of growth rate, we feel that we should be able to grow anywhere between 20 to 30% every year on year, for the next 5 years.
Wow. And so therefore you would presume that...
I just wanted to mention,
Yeah, please finish your point.
Yeah, the question of merger does not arise because, this is a specialized institution, whereas, banks like very successful banks in the private sector have been set up with a different set of objectives, with a different target customer base, and they've done very good job, in that. But there is no alignment of purpose and target market between small finance bank and the successful private sector banks. Now, there's talk about merger because I think Bharat Financial merged with, but frankly, for them, there was no option because, Future as just as an NBFC MFI is limited. So I think the best option was for them to merge with another successful private sector bank. But that's not the case with the larger small finance banks like Ujjivan.
Okay. So
I think you answered the question at the back of everybody's mind, sir. There was a lot of speculation about Kotak Mahindra Bank being interested in acquiring you, but the clear answer from you is that you're not interested in getting acquired.
Right, and I hate to copy Trump, but I can say that was fake news.
Okay, sir. Okay, I have one last question, which is not in the realm of fake news. What are you doing on the loan book side, sir? I guess you have to diversify it over a period of time. And within that attempt to diversify, will you de-emphasize microfinance loans? In any case, we've seen some volatility in that segment. Are you going to grow that segment slower and perhaps the SME lending segment a little faster?
Yeah, see, we already started about 3 years back, both the affordable housing and MSME sectors, and we expect these two to grow at a much faster pace than the microfinance business. We are also looking into the personal lending business. That would be another vertical. So in 5 years' time, though we are not going to de-emphasize microfinance, but we feel that as a portion of our portfolio, that will come down to about 50%, and we are looking at using a lot of technology, which is there today in terms of digital finance and, the fintech companies which have introduced this thing, analytics, etc. In terms of building these new businesses, to a certain extent, I think the whole demonetization impact derailed us in the initial phases. But right now that we have sort of basically brought that under control, though, the next 2 quarters, I think we should be able to finish that process in terms of managing the portfolio quality, etc.
Okay.
But right now we have started looking at new technologies, etc., to build these new businesses.
All right, got that, sir. Thank you so much. Really appreciate you coming down to chat for this morning show.